Good day. Welcome to our Fixed Assets for Mining webinar. I'm Hein Petersen from Actech Systems. I'm your Business Unit Manager for Fixed Assets, and I'll be showing you some of the functions and nice-to-haves that we have around fixed assets and capital. Look at the components that is part of an effective capital lifecycle. We have the budgets that can be created in your system, whether it is directly within your ERP or within a separate budgeting module. This will contain all the budgets for the year or for multiple years. Once you have those budgets loaded, you should be able to procure against them. This will allow you to report against your commitments, your spent, and will also give you your capital versus what has not yet been capitalized. Then you can capitalize those procurements in your fixed asset module. This should then be listed as part of your balance sheet as capital items. From there, you should be able to use your fixed asset register to manage the assets and do your month-to-month transactions, whether it is moving the assets, doing change of life on them, any impairments or any financial changes. At every month end, you should be able to pass your transactions back to your GL so that it will adjust your accounts accordingly. Now we are going to look at the capital procurement and managing your assets today. Budgets and the procurement life cycle for budgets will be handled in a separate seminar at a later date. Now, what are the challenges facing mining industry specifically around fixed assets? It is hard for you to identify which asset is being used as a specific site if that asset is not accurately tracked. So you should be able to track the assets not only according to their physical aspects, but you should also be able to track them within your system of who is responsible, to which division do they belong, or to which category do they belong. You need to be able to measure the assets' use in your environment. So whether they are being used currently, they should be depreciated. If they are not used, they should actually be put on hold so that you don't lose any depreciation value on them. If you are using the units of production method for depreciation, then you have to record the units being used, if it's in ore, if it's in kilometers, liters used, or whether it's in hours worked. It's also hard sometimes to determine the depreciation policy for the different assets. Now, this should be driven by your system, whereas an asset is added to a specific category, it should have a specific depreciation rate attached to it. Any fixed asset system should calculate its depreciation accurately, whether it's being done on the useful life, on units of production, and if it's calculating per month, per day, or per year, those calculations should be accurate and acceptable by auditors. You need to be able to adjust the useful life on an asset, whether it's being calculated on a straight line on units of production. That life should be adjustable. You should also be able to do this in bulk, not at a one-by-one basis. Something that has become more and more important in the industry is to be able to impair on your assets. On some of the assets, if you have an impairment, in the future it might also be required for you to reverse that impairment or to reverse partial impairments. This should be a standard transaction in your module. The solution to all of these challenges is that you need to get a system that will track your assets with ease, whether it's the financial tracking or the physical tracking of any movements or transfers. The system should apply your business policy. You should only determine per category what should be the default depreciation method, and every time that an asset is added, it should default to that. If you do want to change that depreciation method, you should have an option to change it. If you are using units of production as your depreciation method, you need to be able to capture the units so that the depreciation for all the assets assigned to that production plan is adjusted accordingly. Some enhanced features or nice to have features would also be to be able to forecast those units so that you can determine what is your forecast on the depreciation for straight line and for units of production. Any transaction that you do in your fixed asset module should be able to be done in bulk. You should not just go do a one-by-one transaction per asset, but you should be able to use an Excel import file to assist you with all of these transactions. If you want to adjust the useful life on assets, you need to use the bulk facility with an Excel file, and it should be easy. It should not be it a exercise for you to do a calculation outside of your system and then only bring that into your fixed asset module. A good fixed asset module should also allow you to do impairments and reversal of impairments at any given date. If you do a impairment or reversal in the same month, your system should cater for that and should do the correct financial calculations. To this end, we recommend a fixed asset module that will assist you with all of this, and I'm going to show you a demonstration of a module that will allow you to do all of this and more. Show you a demonstration in one of our fixed asset modules called Assetware Manager. We use it in the mining environment and it does work really well. Now, just like with any good system, you should have username and passwords for security, allowing certain people to log in and do certain functions. Let's log into our system. Now on the left hand side we do have a list that allows you to see different assets in different views. Now I want to open up one asset and focus on its information. If we look at asset number 00002648, this is a spiral plant piping. So we have a description of our assets and we should have a unique asset number designated by the system. Part of this is also that if we are using componentization, our system should allow us to add sub numbers to that master number, having individual components to a master asset. Sometimes you might find that your component asset depreciates at a different rate than your master asset, and you should be able to indicate that. If we're tracking our assets, we should be able to assign a barcode to them, a tag number and a serial number. This is important if you want to capture that information and also for tracking and auditing purposes. If we are capturing our asset and we're not using barcodes, then we can actually use the multiple units per asset. So if we are capturing a set of chairs and we want to have 100 chairs listed as a single capital asset, we can do that. On any asset, we need to be able to show whether it's an owned asset, a leased, loaned or donated asset. If it's not a owned asset and we have a reference number, this can be your contract reference number, your lease reference number, then you can record that. Insurance value and replacement costs on assets is also a recordable field where you can then pull reports from to see what is the current insurance value on my assets or what is the current replacement values. For any asset, we need to be able to control when it is being capitalized. It might happen that you would put an asset in your system but not yet capitalize it on that day, but only at a later stage. So you should have individual control over that. If we look at our procurements, the procurements is the purchases done on an asset. Now there are three different types of procurements. You can either do the first capital procurement, or you might want to do an improvement at a later stage on an asset. If you are doing an improvement, it will only capitalize that cost on that day and work out your depreciation based on the new capital value going forward. A bit later on we will show you a transaction on that. You might also want to capture an expense. Now expenses are non-capital in nature. So this will typically be repairs that you've done to the asset, where you do want to record what is the cost information or what was the repair costs on that asset. This will allow you at a later stage to pull reports to see what is the capital value on the asset and what is the repair cost so far on that asset. That might influence the decision whether you should keep on repairing that asset or whether you should dispose of it and rather purchase a new one. Now for the current transaction we did was the first capitalization. As you can see, we record the date when we do this transaction, we record the supplier from where we got the asset from, the order information, so it was a purchase order, we record the order date, order number, and then we can also put in the invoice date and invoice number. So this relates back to your financial system with all its referencing. We need to record the purchase date and we need to record what was the cost of that purchase. Now as I said, this is our first capital purchase. I'll show you a demonstration later of how we're going to add some more capital to this. Show you some of the allocations on the assets. If we look at our asset class, we can see that the asset is currently assigned to plant and machinery. Now every asset class should be linked to your accounts and to your depreciation policies. Now you can see in land and buildings, we've actually split it down into a lower level, so houses and land and buildings. This means that we can assign an asset to a second level and we can even take them to a third level breakdown if we want to. For each one of these categories, we should have a policy assigned to them. So in our accounting book, we should be assigning a straight line policy of 120 months. And if we also want to track this asset as part of our tax register, we can assign a different depreciation policy to it of 600 months if we want to do so. Every time that I add an asset, it will assume this depreciation policy by default, but I can change it. So our asset is currently as part of plant machinery. I'm going to leave it there. If we look at our second allocation on assets, this is your reporting units and your projects. If you want to see where an asset is being used and who is getting the depreciation out of it, you can use your reporting units as part of that structure. Now this can be broken down also into 3 levels. You can use this as an assignment for divisions, cost centers, cost groups, or any financial grouping that you do use in your company. Again, each one of them should have a code and a description, and as you can see, they can be broken down into a lower level. You can also assign an asset to both a cost center and to a project. So if we look at our projects, you can assign an asset to one of them. Now our third allocation is on the physical tracking side of the assets. We need to know where our assets are and who is using them. So currently we say that this asset was moved into a specific location, building A in this case. Go into that, you'll see that building A is part of an address. So at 11 Clifton Avenue, building A, this asset is located physically. We also have a responsible person for this asset, so you can currently see that I'm responsible for it. And then we also assign an insurance group. Now this is an optional field that you can use. We've used it as an example as an insurance group because this might differ from your categories that you are using, but it will still allow you to pull reports according to the grouping rather than to the categories. Now as we move our asset from one location to another, we will add transactions to this policy. Again, at a later stage I'm going to show you how we do that. Now if we look at our depreciation on this asset, you'll see that it's currently assigned as the policy is unit of production. We have a date that the depreciation starts, and we have a production plan assigned to this asset. Part of this is also to have a residual value on an asset so that it will depreciate it from the cost up until that residual value over the life of the asset. It will not exceed the residual value. Now I want to go into the production units and show you how they work. To do this, I'm going to go into our structure, look at the production schedule, and while we're on that, you can see that we have different production schedules here. We have the life of mine, which this asset is currently assigned to, but we can also track the ore production for different plants. You can do production hours, so how many hours has a pump worked or has a generator worked. You can even track the kilometers on a specific vehicle. So for each one of these, you can have a separate production plan, or like in the case of life of mine, you can have a single plan and multiple assets being assigned to that. If we go into our detail of our life of mine plan, you will see that it has a normal description and a code, and then we have our expected yield amount. So what is the total amount that this can actually do for us? We have an expected monthly yield, and this is only for forecasting purposes if we do not put in the actual estimates on it. And then we need to specify when does this life of mine start. For every month after this start date, we can add in an estimated production, and then as we get to that month, we can add in the actual production on it. So you can see that for the months from 2012 July, we've added in estimate and actuals, and up until July 2013 we have its actuals in, but then we only have estimates in. This is used for the forecasting depreciation. So if I were to pull a report in July 2013, it will use these units used as part of my calculation. The simple calculation for units of production would be the units available divided by the units used for that month times the cost of the asset minus its residual. That will give you your units of production depreciation. Now if we go back to our asset, As I said, it's part of unit of production, life of mine. It doesn't have a residual value at this point. If we were to change this depreciation policy, we would simply add a new policy onto it, specify the dates, and from that day forward it will do a different depreciation. I want to show you the images and documents import facility in fixed assets. If you want to add in either a picture or if you want to add in a PDF file, it's quite easy in Assetware. You simply need to select the file, add it into your system, and once you've saved it, it is saved to the database. Now if you ever need to extract that again and save it to another PC, you can extract it, save a copy, and you can use it on that workstation. You can also open it directly from screen. Now this is also useful for Excel documents, Word documents. You can scan your invoices to it, your purchase orders, or if you have user documents or clearing and safety certificates, you can attach them directly to the assets. We do have a custom information function where we can add in any type of field that is not already catered for. Now this is also specific to the category. So for vehicles, you might want to have the registration number and a VIN number, but if you are going to look at your computer equipment, there might be a computer serial number you want in there. There might be computer components, what RAM, what CPU, and all their relevant information. So that can be added into our system in separate tabs with its own separate fields. Now if you need to take on some information from your old register, you obviously do need to balance either at the beginning of a financial year or at the beginning of a financial period. We use the Take On tab to facilitate this, where you can record historic cost, historic depreciation, as well as any current year cost or depreciation recorded on the asset. If there were historic revaluations on the asset or historic disposals, you can also take that on directly. Speaking about revaluation on assets, there is a couple of methods of valuing your assets. You can either do a cost revaluation on revaluation directly, indexation on a price index, where you would select the day that you want to do the revaluation, what is the new value of this asset, who did the valuation for you, and you need to decide what methodology of revaluation you're using, whether it's the gross or net model. Depending on that, your transactions will be different for the assets. Another transaction that can be done, as mentioned before, is your impairments. So if you need to impair an asset, you select the date that you do the impairment, select the value of the impairment, and save that to the asset. This will influence your accumulated depreciation and adjust it accordingly. If in the future you do want to reverse either a part of that impairment or the full impairment, you would simply add a new transaction, do the reversal of impairment, choose the day of this reversal and the value that you are reversing, and it doesn't have to be the total value of your initial impairment, so this can be dictated by the situation. Once you have saved that to the asset again, the financial transactions is recorded and committed, and you can report from them. The disposal transaction I will cover right after we've gone through all the detail as part of the transactions we're going to do on the asset, but I just want to show you some of the detail information that is available for you immediately. If you look at the history of this asset, it was purchased sometime in the past and you did take it on in your system, but now it's showing you for every month of every financial year what transaction is happening. So for 1st of March it did a depreciation of 17,071 Rand, and that adjusted your net book value, your accumulated, your year to date, and everything is available on screen. It shows you the past of the assets transaction. You can see there's depreciation for December, but you can also see that I did an impairment in December. And as you go along, it will show you the future transaction on this asset as well. We can see that in March I did a reversal of my impairment, and that adjusted my financials accordingly. Now this will go ahead up until the end of your calendar of the asset, which should reach your residual value. There's other functionalities around this where you can either show the revaluation on it, so how was it revalued. You can look at this in a graph. So if you are doing your units of production, you want to see how the production influenced your depreciation, you can pull this directly from system. You can also copy this to your clipboard. So if you want to send this on for somebody for analysis, copy it to clipboard and email it to them directly. So if you need to export this to Excel, you can click on the Save to File button, select a location, give the file a name, and it will export it directly with all of this information in it. Now let's go and do some individual transactions on our asset. The first one I want to show you is how do we increase the capital value. We select our asset, we go to procurement, we click on the little plus on the right hand side, and then it gives us a new tab. So you can select a new supplier where you are doing this purchase from. Now this can either be the same supplier where you purchased from originally, or it can be any other supplier that you have. You can record your order information. So what was the purchase order date? What was the PO number? What was the invoice date on this particular purchase? And what was the invoice number for that? You select on which day this cost must be incurred on the asset. So let's do it for 2014-06. And you need to specify what is the new or the cost being added to this asset. Now, as I said, I'm doing an improvement, so I do need to select the improvement tick box. If I save this to my asset, it will adjust the depreciation going forward. And if we look at our financial detail, you can see that in June 2014 there's a cost being increased of 500,000, and that immediately adjusted my depreciation going forward. Now in the same way, if we did not do a capital procurement but we actually expensed it, so we didn't capitalize this, then it will not influence my capital value, and it will only work on its previous capital value and depreciate that going forward. Now you saw that every time I saved there, it did give me a warning message telling me that my tax book is currently at a 0. This means that when I added my asset in and when I added this procurement, I did not record a cost value on my tax book. So it will not work out the tax depreciation currently, but I will show you how we can do that going forward. If by chance this asset has moved from one division to another or from one project to another, we can also record that transaction. So again, we go to our asset, we select its financial movements, click on the plus, choose the day when this transaction happened, assign it to the new division, and if we are assigning it to a new project, we can also do that. Once we've saved it, it will show on the reports that on 2014 February, this asset is now part of a new division and part of a new set of projects. If the asset has moved physically, we can move it from one location to another by going to the non-financial movements and adding a new tab to it. Again, we need to decide what is the new movement date. If this asset has moved insurance group, we decide the new contact, and we also choose where is this asset now physically. Now let's say that it's in area 51 in location 205. We save that to our asset. So in December 2014 this asset has moved from one location to another. Now I mentioned previously that on our depreciation policies, if we want to change it, it will only be effective from the day that you choose going forward. Let's change this from being on a units of production to a straight line method. So we leave our current policy in place, we add a new tab, we select the depreciation policy, we choose the day that this is affected, and we choose the start of life. Now the start of life relates to the life in months field. So if you choose that this asset will start on December 2013 and it will have a remaining life of 60 months, then it will calculate from that date 60 months going forward. If, however, we choose this 60 months to start counting in 2012, it will catch up my depreciation in the current period for those 12 months that has gone by already. It will do it as a lump sum, and it will only be affected in the current period. Let's leave our one for 2013, the life of 60 months, and let's say that this asset does have a residual value on it. So it will calculate depreciation from this day, net book value divided by 60 months, net book value minus residual value divided by 60 months going forward. And you can keep on adding policies. So as the asset life change, if you are changing its remaining life on a straight line, you choose the day when you want to change that depreciation. And if the residual value has also changed, you can change that along with the remaining life. And you can keep on doing this multiple times. Let's look at a disposal transaction. If you want to dispose of this asset in the future, you can select the date of that disposal. Let's put it in for 2015, for 30th of April, and we can select a different depreciation stop date on it. But for this exercise, I'm going to use the same day. If you are selling this asset, you need to supply the proceeds on it. If you are purely scrapping it, it will scrap it at the full value. Now, in the beginning, I mentioned that you can have multiple units on a single asset. So let's say that you have 100 chairs capitalized as a single asset and you want to dispose of 3 of them because they were broken. You are able to use the disposal transaction and dispose of only 3, and 97 of them will still remain. For this exercise, we only have 1 asset, so we're disposing of 1 unit, so there will be 0 remaining. You can decide who has purchased this from you if you are selling it, and you can enter the invoice number that was generated from your ERP for this sale. We save this to our asset, and if we go and look at the detail of our asset again, you will see that everything that I've done now has been recorded on my asset. As mentioned previously, we have the transactions listed in a column here. We have its depreciation for current period, the cost impairment changed, the depreciation for a couple of months, and there you can see is the reversal of its impairment. From there forward, in June 2014, we added a cost of 500,000. And if we go down on this, we can see that it was disposed in April 2015. It will dispose of all the accumulated depreciation, of its cost, of any proceeds, loss, and also of the impairment that was done on this. For each one of these transactions, there is a corresponding GL journal that gets created. So you can directly integrate from your system into your ERP. Now, you've heard previously that I mentioned that you should have the ability to report against any of your assets. So let's go and look at some of the reports available in the system. There are 2 ways of reporting. You can either use the saved templates already supplied in the system, or you can create your own. For now, I'm just going to use the current reports in here. If we look at journal reports, we have additions, depreciation, and disposal. So typically at month end, you would print these reports and compare them to what the journal is in your GL. Make sure that everything is correct there. Let's open up a depreciation journal, and you can see that depending on what your setup is, you can either do depreciation according to the category, the cost centers, the reporting units, and the system will generate the different accounts for you. So we have our depreciation going to our income statement, and we have our accumulated depreciation going to our balance sheet per account. It's showing us the debits and credits for the period, as well as the current year, what it has done so far. Now, we can also have some month-end reports where we can look at all the additions for the current month or disposals for the current month. We also have yearly reports which will do a year-to-date reporting for you. So any additions year-to-date, it will list them for you, as well as the category, the invoice number, invoice date, addition date, purchase date, and the purchase cost of those items. If we look at our disposals year-to-date, it will show us the disposal cost, depreciation disposed, the net book value, any proceeds received, a profit and a loss on the assets. Now, again, on our year-to-date reports, one of the most useful reports is your movement recon. Now, your movement recon can also be done in different forms or different groupings. We have the statutory disclosures, which is purely a summarized movement recon. So per category, what is my cost done during the year? So what was the opening value, the additions, the disposals, and the closing values? And then also what is my accumulated depreciation done during the year? Opening values, depreciation change year to date, disposals, depreciation, and then the closing balance. Effected from this is your net book value. So this is a very straightforward, summarized view on the assets. Now, if we take that same report and we just stretch it out a little bit, we do a detailed report on it. Just give it a second to run. You can see that it's now showing the category, it's showing all the assets descriptions, as long as they're individual movements, so individual movement of cost and accumulated appreciation. As part of this standard report, we included the impairments to date as well as the impairments for the current period. But I'll show you a little bit later on how we can adjust this ourselves, and we don't have to use the standard reports available. One of the methods of doing this is to use the reporting wizard. So if I have my reporting library open, I can run the reporting wizard, which will give me a standard set of reports that are typically for an organization. So if I want to do a forecast for the next couple of periods, I select the forecast wizard. It will give me a little welcome screen. I choose the number of periods that I want to forecast for. I choose the grouping on my assets, if it's going to be at the top level class, if it's going to be per reporting units, per project or location. I'm going to leave it for top level class, and I also want to see the detail on my assets. So I choose the asset detail field. I click on finish, and now it's generating a report for 6 months forecast from the current period. It will show each asset detail with its depreciation going forward. Now typically you would do this for 12 months. I purely wanted to demonstrate that you can adjust the reports. Now if you are using this report constantly and you want to reuse it as a template in the future, you can go to File, Save As, select a subfolder, call this a 6-month forecast report. Save it to your system, and anybody that wants to use it in the future can go to the year end, and there's my 6-month forecast report, and it will pull the information from the current period going forward for the next 6 months. Now you can do this for multiple reports, and each one of them can have a slightly different look or function. Now what is nice about these reports, if you are using some of them constantly, let's say our statutory disclosures, we want to reuse that every month and we really want to make it nice and fast for us to use, we can use the save shortcut function. What this does is for every user it creates its own set of shortcuts. So if I want to do quick reporting, I log into my system. What is my current status of the asset? There's my report. If I want to see what is the 12 months forecast, then it will generate the 12 month forecast for me directly from that shortcut. I don't have to go through the menus to pick up it all. Now this is also nice if you have specific users that only perform specific functions. If you have a person that needs to check all the journals before they get integrated, you just put in the 3 reports for them, and they will only click on the shortcut to run it quickly, have a look at the reports, and continue on with their work. So this saves a lot of time on selecting which reports you want to see. Now previously I mentioned that we have 2 books. We have our accounting book and we have our tax book. The accounting book integrates into your GL. The tax book is for your tax purposes. So SARS gives you a specific rate that you need to depreciate your assets on, and this is recorded in your tax book. Now if we pull a report, so far if we look at our balance sheet summary, I've only done accounting reports. Now there you can see the book is currently book value. So this is my accounting values, and depreciation is based on the accounting book. If I were to go to the books and select a tax value, and I pull that same report, it will now report on the tax values calculated by the system. So they clearly have a different depreciation rate and a completely different net book value. So this way you keep track of both of them, but you can still report out of the same type of reports quite easily. Now we've talked about 2 methods of running reports. One directly from the system where the assets are already a template. One where you can use the reporting wizard. But there's a third method. Along with Assetware Manager you do get the report designer. Now you can see I've already opened it up and I have all the reports that are already in my fixed asset module. If I want to change any one of these reports, I can use the report designer to move them around. There's a preview. I want you to note this field here at the bottom. If I want to change it, I can easily move them around. I can put in variables, put in calculations, new groupings, And if we run that report again, you can see it's moved quite easily. So this is useful for designing your own reports, creating your own structures, and getting it customized for your look and feel. Moving back into our fixed asset register, that will be then your third method that you can do your reports from. The next section I want us to cover is our bulk facilities. Now, any of your transactions that you want to do in bulk, whether it is your movements, your transfers, depreciation, life change, or revaluations, can be done through Assetware. If we go to our data gateway and we select the applicable transaction, you can either import the assets, or you can do transactions, or you can import your contacts. We click on next. From here we can perform some of the transactions. Now for the exercise, I'm going to use the depreciation transaction. So we click on next. At this point you can either fill in the fields, double click on them, select the appropriate fields that you want to use, and throw them over to the right hand side where we are selecting the fields. If you click finish, it will generate a document where you can fill in all the values. So you can manually select the specific asset code, decide if there's a residual value adjustment on the asset. Now you can do this for both your accounting and your tax policies. I'm just going to do this for my accounting policy. Choose the date when this transaction should change. Choose the depreciation method adjustment, and what is the new expected life on the asset. Now you can keep on doing this on all the assets and typing them in manually, or if you are comfortable with the system, you can use a Excel spreadsheet to assist you. So I just want to start this process. Go to company, data gateway. I perform my depreciation transaction, but on this screen I stop it for a second. I've prepared an Excel spreadsheet that contains the headings that you might need for a depreciation adjustment. I've only listed all the asset numbers in my field. So if I go back to my fixed asset module, click on import file, select the Excel file, it automatically pulls all the headings for me, and it automatically pulls in all the assets that I'm using. So this assists you in getting the easy reference between the right assets and your bulk transaction. Now what is also nice about this, if you are changing the depreciation life of the assets simultaneously, you choose a start date and you click on the fill down, and it automatically fills it for all the other assets. So again, I choose the date when we need to change it, fill it down. We do need to type in a comment on this transaction. So we are changing the remaining life on a specific day. And again, because this is common between all the items, I fill it down. I then need to choose my depreciation method. So we are changing the remaining life, again filling that, and let's say that some of them, no, let's say all of them, has a new expected life of 52 months, but we can still change each one of these individually. Now, as I said, I'm doing this only for accounting, but you can do exactly the same for tax. You can also fill it down, or you can do them individually. Once you've completed your file, you can validate it and the system will check for any errors. Once you're done with that, you submit it to your system and it will create for each one of these assets, it will create a depreciation tab showing the information, and it will adjust your depreciation on your asset. Now this can be done, as I said, for multiple transactions, either for change of remaining life or for your asset additions, disposals, revaluations, or any transfer or movement between your assets. It can be done either through an Excel, or you can do it on a one-by-one. What you can also do directly from the gateway, if you are using a template, so let's say for change of remaining life, we are using a specific template with a specific set of headings. We can save those templates. So I choose my change remaining life template, open it up, the headers are already there, and I can continue by adding this in. If we want to really make it easy, we can also put a shortcut on that particular template per user, and you can see here's my gateway bar. There's my change remaining life template, and I've loaded it. So it makes it nice and easy for you to do a transaction in bulk on the system. Now, some of the functionality that I haven't shown you yet consists of your financial calendar, where you'll be able to change your calendar from one month to the next. This will allow you to do some future dated reporting if you want to, or you can backdate a calendar to previous periods, where you can then do reports from there. I want to roll over to the next financial period. We go into 1st of January. Now this is a calculation on approximately 3,400 assets. So it's rolling over to the next month. It is updating my reports, and it is updating all the transactions on these assets. Now you might ask that if I have the ability to go backwards and forwards, isn't that a risk to my asset register? With the security in the system, we do control who has the rights to move the register back and forward, so we do not have a risk of somebody changing the current period and doing transactions that they are not allowed to do. So it's now updated all of my reports, all of my transactions, and as you can see, I'm already in the next financial period, January 2013, and everything is updated to date. As you can see, Assetware Manager works very well in the mining environment. It caters for easy reporting, capitalization of assets. It has multiple depreciation policies, including unit of production, and it will work with all your accounts and your different account structures. It also has your accounting book, your tax book, to keep the different policies straight and get all the depreciation in the correct formats. I would like to thank you for your time, and if you have any questions, do not hesitate to contact us and we'll be able to answer them for you. Thank you.